Sudden turn makes silver investors empty out. Dealers are reeling. The market for silver can literally turn on a dime, and that's exactly what we're seeing, leaving everyone, particularly stackers, left in the dark as we have this mass exit. Oh, if you're interested in silver, click that link in the description. Money Metals is holding this contest. They're giving away 20 American Silver Eagles. Every month they hold this contest. It's free, it's fun. You should be the next winner on that list. Take home those 20 American Silver Eagles. Now, check this out. This is from FX Street, and we're seeing the US dollar reaching a 4-month high of 105.7. That makes silver more expensive for foreign buyers, and it reduces global demand. Also, look at this. We have US Treasury yields increasing. The 2 and the 10-year yields are at 4.28% and 4.32%. So when we have these high interest rates, the opportunity cost of holding something like silver, a non-yielding asset, it leads investors to favor something that is interest-bearing. It just makes more sense because money follows where it's treated best. Look at this. This is from Reuters. And they're showing concerns over a potential global recession and reduced manufacturing activity, particularly in China and US. That is decreasing industrial demand. We've been talking for the past year about this demand for silver in industry, but as these major economies are contracting, industrial use for silver goes down, and that drops demand. So of course that impacts the price of silver, and that's got investors feeling edgy and bailing ship. Look at this. This is from investing.com, and they're looking at iShares Silver Trust, the SLV. It says they're experienced a significant spike in short interest, reaching approximately 47 million shares. That's the highest level since 2022, and this indicates a bearish outlook among investors. That's not what we want. We want to be feeling bullish for silver, like you and I are as stackers. Now, this one is really something that we rarely hear about when we look at silver, but it's so key. This is from Metal News, and they're talking about profit taking and market structure changes. I really believe that this is one of the main motivators for investors just jumping out of silver, this mass exit. It's showing that after silver prices approached key resistance levels early in the year, and I'm going to get to this in a second so it really makes sense to you, investors have opted out to take profits. That's what they choose to basically cash out. And we first saw this shift with the Shanghai Futures Exchange. Now, before I don't want to get deep in the weeds with these words like contango and backwardation, but really what it means is, first, you have to understand this profit taking when it comes to silver, because it's really key. Just imagine silver's $23 an ounce. Would that be great? But just for this conversation, imagine it's $23 per ounce, and a few months later, the price is going to climb to 30. That's a 30% gain. So you decide, I'm going to sell now and lock in my profit. That's profit taking. You're basically cashing out. Now, imagine lots of investors do this at the same time. When many people do that all at once, of course, it pushes the price of silver down, even if nothing's changed. That's what happens. And that's exactly how we started 2025 out. That's how this year began. And silver was nearing that $30 range. Investors saw it as a good time to sell, and that caused a pullback in price. So what we see now is this issue of contango and backwardation, because if you think of silver as apples in a grocery store, and if apples are more expensive to pre-order the next week than they are today, then you call that contango, right? That's a basic way we think of it. And it's normal. You're paying extra to get them later. But if apples cost more today than they will next week, that's backwardation. And when that happens, there's a sudden apple shortage today, right? Like a storm wipes out part of the crop, whatever. Stores scramble to get apples now, so they will pay more today than in the future. And we see that often. But what we had with silver impacting this really exodus from investors is early in 2025, silver did something similar. Normally, future prices are higher than current ones. That's contango. But suddenly, the price to buy silver now became higher than prices for silver in a few months, right? The backwardation. So that told investors and traders, they felt like, whoa, there might be short-term supply problems or panic buying. And at the same time, they don't really know what to do, so they just pull out. They just pull out. And I really believe that is what's causing this big exit from the market. And thank you, Money Metals Exchange, for sponsoring this channel. This is a great contest. It's free. They're giving away 20 American Silver Eagles. Every month they hold this contest. You should be the next winner. Click that link, get in on it, and I'll see you in the next one.